Hello. Really pray my people are having an amazing, blessed. I almost said Monday morning. Jesus Christ, I love Mondays. It's a lovely Tuesday morning. It's currently 26 minutes past 2 p.m. here in South Africa. And we are looking at NAS 100 today. And this is a simple video on what I expect from you every day. So this is what I do, whether I'm executing, whether I'm not executing. But for the month of February heading into March, there will be no executions from you in any shape or form. The goal is to what I call tape read. So before we start tape reading and we start going into live tape reading sessions, what we first need to do is we need to backtest, right? You need to go see it in hindsight and believe that it's true. And then obviously, where would you enter? Where would you go long? Where would you go short? Etc. Etc. So I do remember you took a beautiful short today, which was a nice execution in and of itself. If I'm not mistaken, you did go short here. Caught a few only for you to get efficiently removed from the marketplace and it not really reaching liquidity. And that's okay. That's a lesson learned. But I don't want to see executions. There's no need for you to press buttons. So the first video was just me showing you the conceptual idea. You do know where we went long. You could have held it till obviously, but anyways, that's not the point of the conversation. The point of the conversation is, what do I expect from you? And how do I want you to mark your charts every single day? So we know our model starts at exactly 0 o'clock. So what you can do, right? Personally, I just get here at 0 o'clock on a 1 minute chart and I wait for the first 2 hours to form. So I'll wait for 1 o'clock. The same way I'm doing it here, I'll have this marked on my chart. I'll wait for 2 a.m. and 2 a.m. is the most important one for me. And obviously 3 a.m., which is when I'll get to the chart, and then all positions are closed by 5 p.m. Right, so if it doesn't expand within this window, then you're wrong. It's a consolidation. But if you do want to hold for the whole daily expansion, you will get there. You're not yet that experienced, trust me. Sorry, my brain is already starting to analyze as if I'm in a trade, Jesus. But anyways, so this is the first step. The first order of business is time. That's the first order of business. You mark the time. So in which times would you be engaging? This is the start of the model. This is London session. Not start of the model, start of your session. Your model starts at exactly 0 o'clock, meaning this is the reference point you will use as a starting point for when you at least expect it to be above or below whatever range is set between that time and 3 o'clock. That's basically what you do. Starts. And obviously here, observe. So this is obviously before we look for buyers, before you look for which direction. That's hard. It's not hard though, but that's before that. We're not there yet. We're not on the, are we going up, are we going down, etc., etc. We're not there. So 100%. So first things first, when you get to the chart, let's say you get there at 3 a.m. and you're not allowed, but you just don't trade for the session. Then you wait for it to play out first, and then you mark at which places would you go long and at which places would you go short and why. Let's say for this example, you said you were looking for shorts and you did get efficiently removed, and that's okay. So what you watch is from where you went short to the lowest low. How many handles was that? 35. Beautiful. You got efficiently removed because I think it went maybe 30 handles and then it clapped you. That's okay. It happens. But that was a beautiful trade in and of itself. There's nothing wrong with that. But what you do is first you get to the chart and what you mark is the first inefficiency post. 3 a.m. That's it. Come here first. So you mark it and you do in the middle and you move to the right and not bad, and you can clone this. There we go. Oh, no, thanks. That's cool actually. So cool. So 100%. So we cloned this. So as you'll notice, the market was awfully manipulated today. So when we're basically consolidating in it, and we had this range low here, and obviously that range high. But anyway, that's not the point of the conversation. So what you do is you get here, and I want you within this pocket of price to mark the highest high and the lowest low. That's all. So you get there, you mark the highest high. There we go, right there, highest high. Stretches, lowest low, you mark that. So what is this? This is liquidity that was engineered within this hour. So it's basically the hour's high and the hour's low, it doesn't matter. And within here as well, we have the highest high, which is buy side right there. If it's in close proximity like this, there's no need to mark it, but you can if you want. Like it will aid in more understanding. But there we go, we have buy side there. And within this hour as well, what do we have? We have buy side right at the o'clock, just before the o'clock, right here. That's the buy side there. It's a bit small, so in my opinion, it's okay. It's very awfully piled up. And here we have your sell side right there. And we have our sell side for this hour right there. So this is literally what you'll be doing every day. You're marking the liquidities, you're marking the reference points before literally you do anything. That's all you do. And you get here, you take these and you screenshot and you put them in your journal, and these are data points. But I'll be awfully specific as we get into what I do expect in terms of entries, and this will be your buy side. Right there. Personally, I would remove them, just too much lines on my chart. Bottom right there. So we have marked sell side liquidity, we have marked buy side liquidity, we have, and also here between this hour, we have buy side right above here, which is too relatively quiet. It's beautiful, man. Basically free money. Oh, wait, let's do this. Let's clone this. Oh, it's actually control drag. Oh, come on, man. I'm so slow. It's 2026, man, and y'all are like on fire. This is so cool, man. This saves me 6 years of my life. Jokes. So anyways, and then obviously we have sell side, and within this hour we have that sell side, and ultimately we have that sell side right there as well. So what we do is you'll mark where would you have entered using the first inefficiency. I would have entered long here. Personally, I don't use the, went long in here, and then you move this to the right. And where would you have put your stop loss? I would have put it below this low. Hashtag stop loss, and I'll mark from here to there. How many handles would that be? 19 handles. Beautiful. 20 handles stop, and that's actually nice. And what's your TP? It's always 35 handles. So from there to there, that's 35 handles. It's just above buy side liquidity right there. And what I'll mark is this. There we go. And then I'll mark my 35 handles. Say turn. Okay. So then what I'll do is I'll mark at what time would I have entered within that inefficiency. Let's say I got scared and I thought it was going to run without me, and I would have entered it exactly. Apologies, I am in my office today, so if you do hear any loud sounds, don't kill me. Jeez, don't shoot me, bro. Anyways, let me see first if I'm not on mute, because I do not trust this. Anyways, so first things first, what I'll do is I'll mark here in long. This is where I would have entered long. Oh no, let's do it this way actually. Let's use this one. I would have used this. That's what I would use. And 100%, when would it hit TP? It would have hit it at 09. TP hit. So this is the boring part of trading. This is the part where you're just sitting there back testing, you're in your own office, and you're literally just doing this every day, every week, and you don't stop. And eventually you get better at it. So what I would have done is, so you can remove this, just obviously you need it on your chart, and I would remove this as well, and I would have removed this as well, because you can write it. Personally, I would write it like the risk, my stop loss, where I'll put it, etc. I'll just write it here. That's why you have journals for that. So anyways, so from here I would have had long, and how many minutes would I have been in this execution? I would have been in this execution for 1 hour and 2 minutes. Then you screenshot that as well, etc., etc. So this is basically what you're doing, is you're collecting data. That's what you're doing. You're collecting data using first presented inefficiency every day, every week, and you don't stop. So the nice part about this is, you know when you're going to go long, you know when you're going to go short, you know your average holding time, you know when it spends a certain period of time in inefficiency in any shape, way, or form. It's signs of either a manipulated market or a market that's, I won't say not tradable, but you shouldn't be engaging. No positions. So my brain is now focusing on the price moving here. So I'm like, what's it doing? And I'm struggling to literally manage both, but yeah. So literally, would you had hit your TP before positions are closed? 100%. And literally is all you do every day, every week, and you don't stop. And I would love for you to send me screenshots of this like that. And it doesn't need to be like me. You don't need to use this. You don't need to use that. Make it your own. I saw you did this, right? Is this the one? I think this is the long one, eh? No, it's the short one. Yeah, you use this. So I want you to use that the same way you would. Then where would you put your stop loss? You would put your stop loss right there. And where would you have put your TP? You'd put a TP right up there, 35 handles. There we go, 35 right there. And obviously you move it to the far left to indicate when you entered and when you have gotten stopped. And you have this. And then you screenshot that every day. You screenshot. And you get obviously your averages. You get your risk to reward ratio. You get how long you usually hold the trade, why it worked out, why it didn't. And this doesn't even, I haven't even gone to higher time frames yet, where you're trying to discern, is it going up, is it going down? We're not doing that yet. That's not the goal. The goal is, do you understand where your models form? What would you have done at that predetermined moment in time? Would you have entered short? Would you have entered long? And you're tricking your brain into believing that you would have done this at that specific time. Like, this is literally what you're doing. You're tricking your brain into believing that at that specific time you would have entered that execution, you would have traded that trade, and you saw it coming beforehand, and you literally congratulate yourself. You say, I'm proud of you for entering the trade, I'm proud of you for seeing it before it happened, etc., etc. And I know it sounds corny, but you need to do that to yourself, because your brain needs to believe it. You've been conditioned so much to focus on price and focus on excitement. So screenshot this. I would literally, this is all I would do. In long, my stop loss, my target, and literally the time in which the trade setup happened from entry to exit. And we do this every day, every week, and we don't stop. Every day, every week, and you don't stop. So this is the first stage. And in order for you to get here, you have to wait for 5 p.m. to finish. So what does this do? First things first, it teaches you patience. So you have to wait first for your session to finish before you can backtest. And if you have the luxury, which is what we'll have heading into April, of watching this and tape reading in live time. So what I'm doing basically is I'm stretching your learning over the calendar year. Instead of cramming it into one video, we're going to go through it one step at a time. I haven't spoken about how to differentiate between whether we're going to leave engineer buy side liquidity, whether we're not. Those are the specific of narrative and bias and etc. Those, we don't need those now. First, we need you to understand that this model is there, it's present, and can you see it in hindsight, and where would you have executed. And it's sad, but literally all your analysis are going to be like this. They're going to be winning trades. 100% win rate, obviously, but not really. You're also gonna, I want you to be honest with yourself. Like, what would you have done in that situation? Would you have gone long? Would you have gone short? Because I know you're gonna be sitting here at 3 a.m. But literally, watch. Are you gonna go long or are you gonna short? And when you get it wrong, I want you to mark that as well. Mark like where you would have entered, where you would have gotten stopped out. And once you have that, first of all, you understand that your model does play every day, but you can and you are subject to misinterpretation. And that's the first step. And once you have that on lockdown, it becomes very easy for you to hold on for these long runners, for these swing trades, to trade the same model in a different session. Like, look at this, where we trade into it. This isn't that beautiful. And we just almost hit skyrocket. Like, we literally run to buy side and bam, we're done. We're going back to sell side. And with experience, you'll be able to hold for such moves where you can enter at the lows, which is literally here, and exit at the highs for over 75 handles, which is amazing. But before we get there, we need to be here. We need to be here. And I need you to do this for me. So this is the first video where we're back testing. I need you to show me this every day, just like how I do on my Twitter. I screenshot. Usually with me, you'll see me in an execution because I do this every day. I need to make money. But literally, that's it. This is all I need from you for now. I don't need much. I don't need for you to show me that you can trade it, for you to show me that you understand it, for you to show me that you're good at it, that you're trying your best. That's not the goal here. The goal here is we need to first see it in hindsight. Then we need to tape read it, meaning we don't even place an execution. Then we demo trade it, and only when you're ready, when you believe that you're confident enough to trust that tomorrow it will form, the next day it will form, then you can add real money. But obviously, that's not my decision to make or to give you. That's yours to make. So that's literally where we're at now. And our year starts officially, hey? So you'll be getting a lot of videos from me this year. Majority of them will be obviously of me either executing, would have done it, and once we have questions or once I have your questions, then I can fine tune the lessons to best suit your development cycle and where you are in terms of analysis, in terms of understanding, and then we can hold for runners, we can hold for 50 handles, 100 with time. But for now, I need this from you. I need you to backtest. I need the times. How many minutes would it take? And notice how prior to what you showed me, this is not 1,000 executions. It's not 100. It's not 200. It's just one. It's just one every day. That's all you need, my good sir. That's all you need. So anyways, thank you so much for blessing with your ears, and I will see you again, same time, same place, tomorrow.